Hello everyone, Jesse Webb, Traders Pro. Market conditions moving lower back to mildly bearish in this bull market. Saw that Fitch U.S. debt downgrade yesterday, moving the market lower. We saw momentum move back into that range now. We've kind of notched out of that buy zone, which is going to be kind of concern number one. And we're starting to analyze a crack in this market. We've seen breadth also tick back significantly, and sentiment was a little bit higher. It's starting to move back this other direction just a little bit there as well. We did see the buy-sell ratio, which we talked about this yesterday, as these are moving back closer together again. And so we essentially saw our three-part uptrend, and that was really the bulk of July. And, it's kind of draw this line here, and we had this overall uptrend happening throughout the majority of July. So we'll see if this becomes a significant reversal back the other direction. Markets are at and in an area of resistance. In fact, let's look at the S&P 500 chart, SPY, and go into this 6-month time frame. So we've moved our trending zone back into our color mix, which we don't want to see. This is typically where we move back to a hold, back to a short-term downtrend. In this case, we're still in that long-term uptrend, and we've got a lot of support here before we really have any kind of real significant downturn. So we could test. We'll see if we get another move lower, today and tomorrow, and head towards this support area, and watching for any kind of a bounce here at this range. There is a little bit of support right here, but it's kind of moved through that and a tiny bit there. Just kind of this choppiness here. We had early uptrend in the month and then just kind of flattened out right here. So I think we're essentially through earnings season now, and so market's going to start digesting other information, and so this move here is kind of that first sign of some kind of a pullback, if it's just a shorter term pullback, or if it's going to be something more than that. If we look at the 1 and 2 year time frame on SPY, and can see kind of where we've been, this overall long-term uptrend here, that around that 480 range, and some resistance right around here at 460. This is pretty significant resistance area, and we've had a pretty nice solid uptrend. You can see that that's been the case now during this bear market. Using a momentum strategy, our uptrends were not very long, and we reversed down into our downtrends for a longer length of time. Now we're working our way the other direction, where we're getting a little bit longer term uptrends. Not so much here, but this last one has been a pretty significant uptrend. So we'll see what the next few months look like, and this is definitely an area to not take on new positions aggressively, or looking for lightening up on any of your losers, tightening stops on winners. And let's look. One other thing I wanted to go through was this ETF. So if you go to sectors and then sector ETFs, you can see we had over the last few days and weeks, we've had almost the entire market sectors were in either uptrends or they were very close to it. We had energy and a couple of other sectors that had retraced a little bit. But now you can see almost all these sectors have also now moved back to hold. So we've got energy, consumer good, telecom. So let's see if we got any kind of an inkling of trend reversal here. Energy had already taken off and started moving higher, and we've had, but it's got a little bit of a pullback, still in that overall uptrend. So these two, telecom had really just been sitting, and really is still sitting right here. This is not tech, this is telecom. So we didn't see the big massive run up that we saw in some of those other sectors, but we've got energy, and we've got energy and consumer goods, which are right here, which are typically bearish type trades or setups. Consumer goods going in, anticipating potentially an economic slowdown, and then energy as well, because oil is starting to move back up. So a couple of areas to focus on currently, as we're seeing some of these other markets and sectors, I should say, starting to slide. Some stocks in the new buy list. We'll see if we've got anything interesting in there today. EXTR had a real big solid up day, and moved up into that extreme range, but breaking out of that overhead resistance. Could get some continuation there on that stock. And MORF up into the buy zone, but really not a solid confirmation bar. Rallied up and now kind of that getting that upper topping tail bar, not ideal. OLMA. Also a potential breakout off of a pretty large, long-term base right here, where it's had this area of just consolidation and now working for a potential breakout. Biotech, pharmaceutical stocks may start to come back in. We'll see right here, though. Again, some caution is definitely warranted in the marketplace just because of the level that we're at, and watching for making some adjustments to tighten up positions in portfolios currently. TEX, machinery, industrial products, also had a big move, not huge, 2.5%, 2.7%, but bouncing off of this support area here and then continuing that continuation move. AMPH, a really solid, smooth uptrend here on this stock, where you've got retracement and a pullback, and just a smooth trending stock. It did pull back here into this hold range, but then continued that overall uptrend. So we'll see if that trend continues on AMPH. That'll do it for today's update. Everyone have a fantastic day.